Welcome back. We are about to begin a fresh week of trading on the global stock markets. And the question is that uppermost on everyone's mind is that how we will be faring this week. As you all know that the big tech earnings that of Meta, Alphabet, Amazon about to be released. And naturally, in the backdrop of so many layoffs taking place in the tech sphere, there is a little fear that these earnings of these companies may not be so good as people anticipated. And there's something that is on the horizon, that these companies are not doing well, so they are laying off people, and therefore that the future is not so bright for them. But people forget the fact that these big tech companies have got a lot of pricing power. Secondly, they have already taken the medicine in advance. They have already laid off people, they have trimmed down their workforce, they have right-sized their companies, and they have a lot of pricing power. In fact, they have added more than $1.7 trillion to the US market capitalization and saved the day for the US markets. So they have done everything that is possible already, and they have taken the bitter medicine much before others like the non-tech companies have done. So there may be some positive surprises as well. Now, positive surprises not necessarily in terms of the top line growth, but in terms of the bottom line, they may do better than what most people anticipate. Having said that, however, there may be a few surprises there as well. I'll tell you what they could be. There could be surprises in terms of the fact that although they have trimmed down the workforce and all that, but yet on a practical level, you see that there may be severance package that they have to give, and all this may also impact now how many months they are giving as a severance. That all will impact. That is an accounting issue, but that can impact this quarter, the first quarter of 2023. So that's something that you need to keep in mind. Yet you find that there are companies like Meta which do have a lot of slack, a lot more people who are hardly doing anything substantial, and they may some more layoffs may be coming over there as well. Another point that to be noted is that companies like the non-tech companies now have still not swallowed the bitter pill and laid off people. So there now the layoffs can come in the non-tech sphere as well, which may not be very happy scenario for the non-tech companies, and also for the overall employment situation, the jobs numbers, and all this may not very augur well for the American economy, because once you see that the people are getting laid off, then they may even tighten their wallets and spend less. So the US consumer is the king, is the person that has saved the American economy. If he goes into a shell, then you may find that that's going to impact the markets, their spending power, and therefore the pricing power of particularly of these non-tech companies. And once that pricing power goes away, then their earnings can get impacted. Once their earnings get impacted, their market cap can also get impacted. So all this will come into play shortly, and it will be a very interesting jigsaw puzzle that is getting built. What is going to overwhelm is going to be something that will dominate for the next few weeks. Initially, there is some more steam left in the markets, but I think at any point of time, the steam may run out, and you may see a good correction coming back into play. To get to know more, if you're interested in the US markets, please do join our Prime or Prime Plus Telegram groups. For the Indian markets, you can join Premium or Premium Plus. Number to get in touch is 9820861044. And look forward to talking with you, and we'll give you more timings as to what will overwhelm when the markets have been very slow, lackluster last few weeks. Now, when that can change, we'll tell you everything. Take care. Bye.